When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron.
Hello and welcome to Moving Iron Podcast. I've got Andy Campbell back here from Track Zoom to talk about what's happening in the marketplace. So Andy, how you doing, man?
Doing well, Casey. It's exciting times. Nerve-wracking, but exciting.
Yeah, it's a weird feel going into 24, right? I mean, some are really concerned about the economy is going to look like. Some are concerned about they think that they're going to be profitable, but they don't know how profitable they're going to be. And some are just straight up worried about what they see with Fed and those kind of things as far as interest rates go. So it's just a very uneasy time right now. I talked to a lot of folks, and I don't get the same vibe from everybody I talk to. Typically, when something like this comes around, you get a similar vibe, kind of across the board, kind of a similar storyline. But I'm just not feeling that right now. What are you hearing from the guys you're talking with?
Yeah. I mean, I was actually listening to a couple of the farm podcasts, talk shows, going over the markets and stuff. And yeah, you're right. It's all over the board, probably due to a little bit of how the farm economy was this past year. Yeah. Some people struck it rich and didn't expect to. Some other people took it in the shorts. So probably, due to a little bit of that. And then you see the same thing with the corn market. Some places, especially Indiana and those, they've got piles of corn. Up in the Dakotas, I've heard they've got the same. And then some places here in Iowa where their ethanol plants usually have million bushel piles, there's nothing. Yeah. And so I'm kind of seeing similar, sentiment, both from dealers, a few of the ag lenders that we talk to as well, that it's a little up, a little down. But in actuality, I think what we're seeing is it's going to be somewhere in the middle and a little bit more moderated. So that's just kind of my take.
Yeah, I think 24 is going to be one of the first years we've had in a while where it's not either all really, really awesome or all really, really bad. It's going to be an even mix of both. I kind of feel like we're going back to a 2018, 2019 style economy where it wasn't really, really bad, but it wasn't really, really good either, right? Right. And they were just right there making money, but it wasn't like they were making tons of money, right? It was not like they weren't like losing a ton of money. So we'll have to see what happens there. But I think 24 is going to be a very interesting year to watch play out and how things change, especially if the Federal Reserve starts looking at lowering rates and they kind of start going through that. And you've heard people talk about that. And I've had, Rich Poston on here talking about that quite a bit over the last, 6 months or so. He doesn't think it'll happen till, into second quarter, going into third quarter before that happen. But there's a lot of people betting on that January, February, March timeframe to start seeing rates go the other way. So we'll see what happens. And when that does happen, and if it does take off, like I told a guy the other day, 5% interest looks pretty good right now. And that's going to be
easy thinking about that, but that's the case.
Yeah, for sure. For sure. All right. So let's talk about a little bit what we see happening here. Let's go with a real life example, Andy. You were talking earlier that you got an 8130 out there that you guys on your farm that you're running through the auction market a little bit. Talk about that a little bit and what you see happening. Is it playing out like you thought it was going to?
Yeah, I mean, literally it's going on right now. So it's a Steffes auction up in North Iowa. And to lay the background on this, you and I are recording now. It's about 10:20 in the morning. It was supposed to close at 10 o'clock. And so, they're doing the extended bid now. And it's in that last section of the auction where it always, hopefully, skyrockets.
That's right.
But
Yeah.
laying into this is, probably about 2 months ago, we were working with a nearby dealer on potentially trading this in. We're already upgrading to a newer tractor. We have to this year. And so do we trade it in? And what offer were they providing us versus do we take this thing to auction? And we're really watching the recent values and how they're continuing to hold strong at auction. And so essentially it became back and forth where we had to make a decision to ship this thing off to the auction yard if we were going to do it. And then the local dealer, the final offer that we got, which ended up not actually being their final offer, was a little too low. And so we rolled the dice thinking that we could get better at auction. Now, as it's playing out, we are almost 20,000 above of what that final offer was. So good thing that we're watching the trends, I think, but as of, 4 hours ago, we're actually below. So it's just right now starting to take off. But I think what it is it's showing a little bit of, this is pre-def, 2013. It's those types of row crop tractors are doing well right now.
Yeah. How many hours you get on it?
5,000.
And see, that's a sweet spot for something like that. I mean, that 3,500 to 5,000 hour tractor right now has always been, for the last 10 years, has always been a bang for your buck kind of tractor when you start looking at where those values start to play in.
Yeah. And so we're watching it play out right now. Obviously been glued to it all this morning, but yeah, I think it gets back to a little bit of what we talked about just a second ago with what's 24 going to look like. Mm-hmm. And, I think there's farmers right now with enough cash reserves from 22 when they're holding over grain. 23, at least in our area, was better than anticipated for a lot of farmers. And so even though they're anticipating and they know 24 is not going to look as good, they've got the cash in the pocket right now. They're thinking about building up their fleet in anticipation that the next few years might be rough.
Yeah, absolutely. And so let's spend a little time talking about that tractor and just that kind of where that's at. So when you start looking at I break it down into about 5 different tractor groups, right? So you got the 0 to 300 hour tractor, you got that 300 to 500 or 600 hour, maybe 700 hour tractor, maybe one group there. I really think it's 300 to 500, and then there's another group from like 5 to 7, and then 7 to like 1,000, right? But then you start going from 1,000. That group from 1,000, they're really looking at that. Is a 1,000 hour tractor what I'm looking for, or is it a 2,500 hour, 3,000 hour tractor that I'm looking for? And they'll play in that range a lot. They're really playing that range a lot. And then when you get above 3,000, it's when you're looking at about that 3,000 to 5,000 hour tractor and what that looks like. When you're looking at all those things and how they play out, those things are all starting to show, kind of go back to that 2017, 2018, 2019 timeframe where it was the $50,000 something or the $150,000 something was what was really starting to be where that contraction was in the marketplace.
Yep.
Primarily because I've got a tractor that's got $50,000 worth of equity in it. I can go buy a $100,000 tractor and finance $50,000. That's some of the mindset you see there. Balers were another big thing that we kind of saw go through that. Baler, windrowers, those kind of things where, again, I've got $25,000 equity in my baler. I can go get the new $60,000 baler and I'm going to have to finance $40,000, right? Mm-hmm. A lot of that stuff where cash on hand too is also playing into that. I had $50,000 in my equity in my tractor. I got another $50,000. Now I can go finance $50,000 on the $150,000 something. And my banker's going to let me do that, right? Or I can fly under the radar and the banker's not going to know I'm doing it or something like that. Those kind of things are playing into play. You're starting to see more of that start to come back into what we see happening now where they're looking at the equity they have in the machines. They're looking at the cash they have on hand, and they're looking at what's upgraded. What am I upgradable to without really having to go out and, do a whole performer with my banker about, what can I do and what can I do? And I think you're seeing more than like you're just talking about right here. The tractor you're talking about, your 8130, is a great example of that because 1, pre-def, right? 2, it's got that, it's in that hour range, but it's also in that dollar value range where guys are taking a look at it of what have I got versus what the cash do I have and what's my actual risk and financial opportunity that I'm going to see come ahead of me here. And you're more and more of that kind of stuff is playing out over the course of this, what we've seen in this typical auction period between, September through the end of the year here and in December.
Right. And I think, not to make your model more complex, but I think the older tractors, the 8130s, anything that's essentially 5-6 years older is fitting into that a little bit.
Right.
Where I'm starting to see a little bit of a difference on that is when you get to like your 8R series, plenty of supply of those out there. And, the 1-year-old 8R tractors, they seem to be doing really well right now. But once you get to be 2 years old, 3 years old, put on 1,000+ hours, I'm starting to see that market decrease a little bit. But I think that's because you got those farmers out there that either you're big enough and you've done well enough that you can buy and you want to buy that 1-year-old just because that's what you do. You trim them every year.
Yep.
But there's less of those big farmers, again, that want those 2 to 3 year old. They don't want to be a twice owned 8R owner. Yep. And I think that market's getting a little bit weaker right now.
Yep. And I've talked about that a lot here when we start looking at the solidification of buying groups. You start looking at that. If you're a 1 to 2 year old buyer, you're a 1 to 2 year old buyer. If you're a 3 to 5 year old buyer, that's your box, right? And if you are, a 6 to 10 year old buyer, that's your box. Guys are looking at that from a perspective of, if I've got a year ago, I bought a 1-year-old tractor when things were really good, or a 2-year-old tractor, things are really good. My typical, trade cycle falls back into that. I'm trading my tractor every whatever those trades are, 3 to 5 years or whatever it is. They're looking at the tractor they had 100 hours on or 200 hours on it or something like that when they bought it. And they're looking at it, we put 300 hours on it this year. We're going to put 300 hours on it next year. Now we're going to be close to that 1,000-hour range, and we're going to be in that 3 to 5 year trade cycle again. And then we're going to go back and look for that 1-year-old, 2-year-old tractor all over again. To your point, the guy that has that's going to buy that 6 to 10-year-old tractor, whatever it is, and those things that come into play there, all of those things are starting to play out the same way, where they have to come back to the table now and start looking at buying that 1,000-hour tractor and trading in their 2,000 or 3,000-hour tractor on that 5,000-hour tractor, whatever it is that they're doing, and going back into that 1,000 to 1,500-hour, 2,000-hour range tractor. Those guys aren't ready to do that yet. Just because of where interest rates are and what that looks like, it's going to be a struggle, I think, to bring in that. I think the third buyer, the fourth buyer, they're going to be pretty active because just what I talked about earlier, my machine's got this much equity. I can do these things with it. I can finance X and still be within the range that my banker's going to let me be within. But when you're looking at coming in to buy that $300,000, 1,000-hour tractor, that's a whole different thing. I've had conversations with guys where they're saying, like, the trade difference that you want me to do with this right now is more than I paid for the tractor when I bought it new. And that's a mindset thing. And it's a tricking of the mind that you're looking at there, because, let's be honest. These tractors and combines and everything else had depending on what it is and what it was, a 30 to 40% price increase over a 3-year period. And you saw interest rates jump up 400 to 600% in that same time frame. So there's a lot of shock and awe right now where guys are like, holy crap, you want me to go out and trade my 2.5% interest rate in for a 8 or 9, 10% interest rate? It's a whole different world right now. And it's going to have to, this is going to have to settle down through 24, I think, in my opinion, through 24, before you start having people come to you and say, all right, this is the new normal. I'm ready to start playing this game again. Let's start doing that. It's just like anything else, that whole yin and yang and watching things move as things go through this bubble that we've watched deflated and where we're at now. It's going to continue to have this feel like, oh my God, the sky's falling. Well, the sky's not falling. It's just things are normalizing again, and there's some pressure that needs to be adjusted in the right spot. So your tractor's a great example of that.
Yeah, and that's interesting. And it's not the same for all different categories.
Right.
We're seeing combines, definitely some different hour categories in the combines are getting hurt a little bit more. And we're also analyzing sprayers too, planters as well. It's not all categories that are getting hit the same right now. But I think that the other piece of the equation then is the supply piece. Do people feel like they've had an opportunity to upgrade when they needed to upgrade? And in combines, I think for some categories of combines, The answer is yes. Not at all combines, because there's actually some of these results that are coming in that are still mystifying me.
Right. Oh, yeah.
But
there's some of that stuff out there. I'm like, really? We're still doing that? Okay, look at that.
right.
You know?
Mm-hmm. Yeah. I mean, the 780s, they've been out. There's been too many of them for too long. And we're actually in October, we were following Hudson's auction, which they had, but they staggered it, throughout, I think based out of Kentucky, but staggered at 3 different auction sales. And I was watching some of the prices. They were good. They beat kind of what I thought they would come in at. But as the month progressed, some of the return values got a little bit less than the previous auction. But then, there's a few late November and then last couple of weeks here in December that sold. And they were just up there with almost 21 and 22 values.
Yeah. Yeah, I've watched a couple of those too and you watch one and whatever, and then you watch 2 and you say, maybe there's something here. And you watch 3 or 4 come through and you're still seeing the values hold on things that are what I would consider to be extremely high auction values. It's amazing to watch how nothing's, especially on like Class 8 combines. I don't care if it's Deere or if it's Case, Glean or whoever. All of those Class 8 combines, there's a million of those made. Where was that? Because that's natural transition that you saw. You went from 20 years ago, Class 5, Class 6 combines were kind of ruling the world, and then Class 7's kind of jumped in and they ran the world for about 20 years, and then now you're left with the Class 8 combine and bigger. Now you really start the idea of Class 9 and Class 10 combines are really starting to come into play as you look at what's going on there. And I think that used market's going to be interesting to watch over a couple of years. We'll get to that here in a minute. But as you're watching that Class 8 combine thing, if you look out there, what's going on, man, there are more Class 8 combines than all the other combines combined. When you start looking at what's actually on the marketplace, you would think supply and demand would have kind of played its role here, and we would have watched to see what happens. But it's not. It's almost like that's the new normal, because I think this is just my opinion, so take it for what it's worth. Guys are looking at the Class 8 combine and they're saying like, well, if a Class 9 is worth X and a Class 10 is worth X, then I'm getting a pretty good bargain over here at this Class 8 combine. Now, I don't know if that's right or not, but that's the only logic that I can come up with that makes sense in a scenario like this.
Right. Yeah, they have to anchor on something for that value. And so that's a piece of it. And so, like you mentioned earlier, it's going to take a little bit of time for people to get accustomed to, like, this is the new norm that we're seeing with these values. But I will say, and it gets back to those different buying groups, the one weak piece that I've seen with the S780s in particular, because I looked at the S780s, the 8250s, I took a 5-year-old segment, which is about, the S780s, some of the older ones that are out there. Those peaked in value around, in 22. In early 23, they were doing okay, but still they were a little bit less. And with those 5-year-old S780s, I've seen now those recent sales. So we're talking August or October, November, and a couple here in December. I'm seeing those drop below what we saw earlier this year. And so I've seen like 4 instances of this, not just one. Right. So with that one, again, but maybe you're talking a very unique set of buyer there that's possibly getting fatigued and worried about cash flow.
Yeah. Yeah. And I think that's the other thing too, is I kind of wonder a little bit. I mean, obviously there's going to be lines of credit and that's going to be part of it, but you kind of look at some of these lines of credits, and I've talked to a lot of folks and seen a lot of different stuff out there on social media where guys are flashing, 10, 11, 12, 13% on their line of credit. You know what I mean? And so some of these guys got to be sitting there going like, okay, here's the deal. So we got to get this whole interest thing figured out. We normally get whatever. We get $500,000 or whatever the number is. We get $500,000 line of credit. We've got 150 in the bank. We're only going to get 350 this year. And we're going to cash flow this other 150,000 with cash and then kind of look at that from that perspective, because we start looking at those kind of numbers on as big of numbers that you have to have now for lines of credit, even on the smallest of operations, that in a lot of cases, that is your profitability right there going out the window in interest. So there's that other part too. I think that folks are really diving into from what's my cash flow look like, and how's that work, and how's it going to play out this year? So that'll be. I just telling you, 24 is not going to be. It's not dying. There's not going to be some big, huge, the world's coming to an end type scenario. But what I am talking about is the way people look at how things are coming along, in my opinion, are going to be really driven towards how is the rest of what's my profitability look like and what's my cash flow look like. And they're not going to know that till the end of the year. And I think that's kind of one of those things that we'll see. So I don't know. We'll see what happens.
Yeah. One interesting thing, and I can't answer this one, but when you have a conversation with a grain marketer on here, you should ask him on how much grain does he think the farmers have in the bin, because of that exact reason right there. Yeah. If they can sell now and this year, take advantage of a slightly more advantageous, like 179 deduction, and buy that equipment right now, offset some of the decent profitability this year, knowing that next year is going to be hard, and also taking that cash right now to reduce that operating line of expense. My guess is that farmers are going to carry a whole lot less cash in that bin into next year. And the implication there then, if that's actually the case for the dealer, is this is the year. Because if they're not going to have that profitability next year of selling that, that cash grain, they're just going to have less to potentially offset.
Right.
And again, it's not, like you said, it's not the sky is falling, but it's a way back to that 17, 18, 19 timeframe where they have to be very cognizant of their cash flow and what their operation can handle.
Yeah. And it's still, and we're also back into a normalcy of the buying pattern of, for 3 years we went through, if you had it on the lot, I'll take it. Doesn't matter. I'll take it. Now it's like, oh, you got 5 of them in the lot now. I'm going to really look at what you've got here. I'm going to pay attention to what you've got here. And I'm actually going to go out and try to find the one that I want. I'm looking for a specific option, or I'll need a certain tire size, or whatever it is, Those kind of things are going to start playing out to where more folks are going to start holding out till they find the exact piece they're looking for. And that's going to be an interesting run, I think, as we look at those kind of things.
Yeah. And on that note, I mean, you and I chatted about this a little bit before we got on camera. What we're hearing now at Tractor Zoom is a lot more of our dealers are calling in about how they're using our product differently now because of that sales cycle. And, you log on to Tractor Zoom Pro and you've got all the comps and, click through and see all the auction, recent sales, all the dealership listings. A lot of dealers are just turning that computer around, sitting down with the farmer when they come in and say, hey, whether you're trading into me or whether you're looking to buy, this is what's out on the market right now. And it helps level the playing field a little bit so you don't get those conversations with the farmer where they're saying, I saw this Indiana auction that went like for $150,000 and they just have a skewed sense of reality. It's just bringing everybody to the same playing field.
Right.
But what it's actually doing then is it's successful at keeping that conversation there. And so then it's not hey, I'm going to go home and do my research and maybe give you a call back. It helps close that conversation right there when the farmer walks in the dealership, which I think everybody knows it's just a higher likelihood of success.
Yeah. Yeah. No, and you're exactly right. When you're looking at trying to figure out what the more information that you can present. I've heard a lot of folks say, hey, the more information you present to somebody, the more you give them to think about, and you might give them the fuel to go do something different. And I kind of always feel like, what are you talking? No, that's the more information I can give a customer, I think the more trust you can build with them. Right. And they're seeing the transparency in what you're trying to do. Right. Yep. And the thing about the sales process is we're trying to get everyone to win. Right. I need to win a little bit. The farmer needs to win a little bit. Because we have, both of us have to make money. Right. And that's just the thing of the way it looks. Now, all that being said, if you are, not diligently looking at the trend lines that you see develop in, the equipment business, the old saying, trend is your friend type of thing. I mean, there's more information out there now to show you what something's worth than ever before. And even from when this is coming up on my 18th year of doing this. If you've got from where I started at, what you had to pick from, and where you're at now, and what you have to pick from, it's almost overwhelming the amount of information you have now to see what things are doing. And some of the stuff you can track, some of the stuff you can't. Some of the stuff is there, but there's plenty of information out there and plenty of places like Tractor Zoom that'll give you what you need to find. And I think that's the kind of misnomer a little bit when you start looking at, only using one site to go look at your stuff, or only doing, whatever. You've got to track auction values. You've got to track retail values, and you got to see what's happening month over month over month. And I think like Tractors, you guys do a great job of being able to see what that looks like, and it's easy to pick that up.
Yeah. I know for me, it's been nice just analyzing the data, being able to have it just structured just that way. So I can dice it however I want to or filter through it just to see those trends, because you're right. I mean, it does get nuanced because we know there's buying groups out there. There's regionality. I was just talking to Kevin out at Huber about just how vital the 4-wheel drive combines are out there. And now I'm seeing the price difference that he's seeing out in Pennsylvania versus, here in Iowa. I can't statistically pull out that major price difference that he can. So it's just stuff like that that's important depending on where you live and what your situation is.
Yeah. And that's a great example. Kevin out there at Hoover's. I mean, he's the guy's, if anyone out there in the world is dialed into what's going on around him, it's Kevin. I mean, you guys dialed in great there, but it's funny to watch these waves come, right? So they typically start somewhere and they work their way to a certain direction. And sometimes it's in the middle of the country and the wave kind of goes east. It's funny that you don't see the wave ever get across the Rocky Mountains, though. It gets like the Rocky Mountain is kind of like a whole different world over there as far as how things work and what things do. But so whatever Kevin's seeing right now, 3, 4, 5, 6 months, whatever it might be, we out here in the far west Corn Belt, we could start seeing what he's talking about there. So being able to see those trend lines develop and what they look like, that stuff's also important. I've talked about the flow of equipment north to south. You have these higher spec machines that come out of Iowa, Illinois, Indiana, Nebraska, Minnesota, North and South Dakota, those kind of things, and how they work their way down into the deep south, the Mississippi, the Alabama, Georgia, those kind of things. But that being said, those tractors out of the deep south work their way back to the north because they're typically a lower spec tractor, and they have a great feedlot operation type of kind of filter because of what they have, because of how they set up and what they look like. So watching that flow of how those machines come back and forth and where they're coming from, what they're doing, what it looks like. I mean, to me, it's just it's very impressive to watch how so much of this stuff has developed and grown along the way. That just tracking these trends that you see happening really paint a picture as to what's going to happen, not what is happening, but what is going to happen. And it's fun to watch them.
Yeah. I was talking to the Ag South guys this summer and about tractors and combines and what they might expect, because we were seeing it creep from the Dakotas essentially down, and you could say, okay, this is heading your way, but you've got a heads up on this thing.
Right.
But then we were talking about sprayers. And sprayers are a little bit different, to where it doesn't necessarily flood one direction or the other always, but just because of the prolific use of the sprayers in the cotton fields in the South and Texas, and the fact that they can use them year round. Yeah. So in the Midwest, we don't necessarily predict that market because they're using them. They're getting brand new ones. And sometimes those come back up north a little bit too. So by tracking the sprayer values down south, we're able to look at like, okay, here might be what we see, August sale time and the end of year sale time. And it's kind of playing out that way with the stronger sprayer market.
Yep. I've always wanted to spend the time and effort to do this video. You'd have to have an incredible amount of data that goes back a long, long ways, but see how many pieces that you could find that started out in Mississippi, for example, and how many times they came back into different places or different sites on the internet, and see how many times they came through, and then where were they at along the chain before they got to wherever, when they got done, and then did they make their way back down? Because I've even seen that come through a couple times. But watching those things move and how often are they moving up and what hour range are they moving into, all those trends make such a huge difference in what you see happening in your area. So if you're in an area where you're heavily reliant upon, maybe you don't even know this, but you're maybe heavily reliant upon those machines moving out to a different area or staying in your area, right? You have got to know that in order to be ready for whatever's coming, right? If you're heavily reliant on 10 or 15 tractors a year leaving your area and going off someplace else because you don't have the machine you can't absorb the machine population in your area, and those 10 or 15 tractors stick around, but you aren't necessarily aware of that trend line, you have a used equipment problem coming your way, right? If you need those tractors to stay there because you need the used equipment population and they leave, well, now all of a sudden you have a demand issue, and your market is going to adjust to that. It may be you might be $10,000 or $15,000 higher than everybody around you, in relatively regional areas and those kind of things. But you got to know that. And I think that's such a key part to used equipment management and used equipment thought processes as you look through these things. That's knowing what your equipment does, how's it moving, where's it going, and what you can and can't afford to have come in and out of your area. That's such a big deal that you got to pay attention to.
Yeah. I mean, in college, I was a chemical engineer, so we didn't study tractors at all. But what we did study, though, is like the flow of material in and out of processes. And it's the exact same thing. And you've just got, you've got to really understand, obviously, the flow in is important and what you're getting allocated and what else might get, put in your market. But on the outside, obviously, you've got auctions that people are utilizing right now and where you choose to auction that stuff. And that's kind of the quick trigger that you can pull. But then setting up the wholesale channels like you want to. And then also, what you want to, and what you can retail out, but then also the export market, which gets, the more of these options that get in there, that just gets interesting on managing it. And then also trying to understand what's coming down the pipeline. Nobody really probably predicted what was going on in Ukraine, but now seeing China and then what's going on in Brazil and how much you can actually get out into those markets. It's an important lever that you've got to be able to pull so you can manage that, essentially that water level in your tank.
Yep. And to your point, 10 years ago, you couldn't get anything into China, and you couldn't get anything into Brazil either. And that's dramatically changed and what that looks like too. So new markets popping up all over the place. That's the beautiful thing about staying on top of these trend lines, that you can understand what's happening and see what happens and see how those things roll. And if you're on the cutting edge of that stuff, you're gonna win every time. And you're gonna find profitability where other people aren't, and I think that's a good idea. So, all right, Andy, that's probably a good place to stop. Any final thoughts you want to throw out there before we close things down?
I mean, just in terms of updates, we've got things are changing fast, and so I know we're holding some meetings with dealers almost every week now, just to kind of break down this auction market and what's going on. So, if you've got questions about what's going on, everybody can feel free to email me at Campbell@tractorzoom.com. They can also go to our website and find some contact information pretty easy there. But yeah, staying on top of the market is important. I mean, what we're seeing, some mixed results within tractors, some older combines starting to weaken. Like I said, sprayers staying strong. But that's right now as of the first week in December, with all these auctions and all this volume coming through. It's always changing.
Yep. Definitely I don't know that since I've been in this business that there's been a time where I can say that there hasn't been an incredible amount of issues that you have to overcome, and they've all been different. They've not been the same. So they might look the same, but they feel a lot different. So make sure you stay on top of that stuff. Make sure you are looking at trend lines and know what those look like. So Andy, appreciate you being on the podcast, man. One more time, if folks want to reach out to you, what's the best way to do that?
Yeah, they can email me at Campbell@tractorzoom.com or go to tractorzoom.com or tractorzoompro.com to learn more about us. And also there's contact information there that they can reach out. And I'm always happy to pick up the phone, hop on a call and discuss what's going on.
Right on. Well, Andy, appreciate you being on, man. We'll talk to you again soon.
Okay, appreciate it, Casey. Thank you.
Yeah, right on, man. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to see where I'm at now. I got Snapchat, Moving Iron Podcast, and go to TikTok. Go to that one too. Moving Iron Podcast. Go to movingironllc.com for everything Moving Iron related, and go to the YouTube channel, which is the Moving Iron Podcast YouTube channel. Check us out there to see the video version of this very process. So, I think that's really about all I got. So with that, I'm Casey Seymour with Andy Campbell. Let's move some iron, folks. Out.
Moving iron in the 21st century.